What's up, everybody? It's Flopping Groper, August 18th, 2024, and we're about to pick the winner of our giveaway, the $200 giveaway from our last video. And I just want to say one last time, thank you guys so much for getting me to 3K subscribers, 101 likes, 42 comments. My engagement is crazy, man. And I'm feeling the love, and I'm going to keep putting out good videos for you guys. I'm going to keep showing up, going to keep doing my push-ups, and I'm going to make you guys proud, and we're going to get where we need to go together. So thanks for joining me on this journey, and let's pick a winner. All right, you have to say Big Lebowski. That was the requirement. All right, Nick Hilu. Nick Hilu, you're my boy, man. I see you commenting all the time. You know where to find me, bro. DM me on Instagram, Nick Hilu, and we'll work out the crypto payment. So congratulations, Mr. Nick, on the $200. Hopefully that helps you. And without further ado, let's get into some of the things that I've been talking about. So on Twitter, major recession indicator, leading indicator, the treasury bonds here, the T10 Y2Y chart, getting closer and closer to that yield curve un-inverting. We came super close. Look how close we came to un-inverting. Negative 0.04 here. Once it crosses the zero line, that's usually a leading indicator of a stock market crash. Back here in the 2008 crisis, we had like a 60% drop in the S&P, another big drop here in 2000. So this could be happening again. It's right on our doorstep. Looks like Market Cypher is saying that we're a little bit tired on the waves, so we may have to come down a bit, but this is something in the cards, and maybe, you know, indicators like this are the reason why Warren Buffett has been selling. And overall, there's just a lot of talks about recession and the stock market, not having a good time. That being said, you know, when you analyze the stock market from a VWAP perspective, the VWAP is still, we're actually still holding over the year-to-date VWAP. See this year-to-date VWAP still holding as strong support. And so you wouldn't really want to short the S&P unless it's starting to have a bad year, right? So obviously, if the S&P were to dump like 7%, fall back under its year to date, then you would start making calls for, you know, maybe we want to retest the previous year's year to date or something like that. Just be mindful that if we ever do lose the year to date on the S&P, things could get really bad really quick. But for the time being, we're still in that up only mode. We're still kicking the can down the road. And it's still a party above deck. So, as for Bitcoin, you know, look how choppy this range is. This is definitely like a no trade zone. Although on the 2-day and daily, they are finally starting to scream bullish here. You know, we're seeing a nice deep enough wave here. And it's not a textbook bull div, but you do have the uptrend of the blue waves here. So this looks rather bullish. The 2-day starting to clip to the upside here. Weekly still needs to be convinced. 2 weeks still bearish, and the monthly still bearish here. And we would remain bearish until we can reclaim this like 64K area, flip that candle green by the end of the month, or something. So Bitcoin's got to do something, because this monthly Heikin-Ashi is not good. Now, when we zoom into the smaller time frames in this choppy little range, you can see that, Bitcoin is tussling with its year to date. This to me is almost like a no trade zone, like I said. So, you know, until Bitcoin finds a direction that it wants to go around the year to date, it's a little bit tough to call what it wants to do. Obviously, if we slip below, the VWAP from this low down here, this purple VWAP down here, then, you know, you have the further continuation down. And if we can reclaim back above the July 1 anchor, the Q3 anchor, then obviously you have a play to the upside here. So I have these two scenarios in mind, but we want to see what Bitcoin does inside this range. So, you know, it's kind of a tight range. There's definitely some good volatility, but there's a lot of price traps in here. Like, I mean, just by watching the price action the last couple days and not trading it, you know, like, look, you hit that 60, you hit that golden pocket and you short, and then it just pumps back up on you, right back up to the golden pocket. And so it's like, that's just one little example of, you know, the price just going all over the place. If you were someone who wants to long above the year to date and short below, look how many times it would have gotten you in or out of the trade. So it's just very schizophrenic, very emotional, very choppy, and not my cup of tea. Now, when you go on to like the Hien AI on the daily, Hien AI starts every candle at the midpoint of the previous. And so it's supposed to do a good job of letting you know what the trend is. Like, see, in this big downtrend here, the Hien AI was red the entire time. In this uptrend here, we were green the entire time. And that is the type of moves that we want to get into for our swing trades. Whereas these little regions, like what we're in now, or like back here, or like up here was one, you can literally see it. See the choppy Hien AI. The choppy Hien AI is something that you really want to avoid. And it's actually like risk management advice. Like, this is just risky territory to be trading when you see the Hien AI flipping often like this. I actually recall a point earlier on in the year. You know, we had dumped after the ETF and we had a nice rally up. We're slamming our head on the year-to-date VWAP. And this right here was a range that was tripping up a lot of my traders in the VIP, myself included. A lot of money was lost in this chop here. And it's a shame, because if we had just waited and just sat on the sidelines, sat on our hands, and waited to see what the price was going to do around that year-to-date VWAP, look at the freebie play that happened right after. And so you don't have to force a trade. You don't have to trade in this choppy Hien AI action. Sit back, relax, and wait for the price to pick the direction that it wants to go in, and simply ride along with that. So that's going to be my approach here. Before I give up any more of my gains from this month, I'm going to be chilling and waiting for either a break out of the Q2 anchor or a breakdown of the anchor from our low here. And it's all going to hinge around, you know, what Bitcoin's going to do around this year to date. Is the year to date going to flip support again? And are we going to make a play up to maybe like a 64K Bitcoin, or maybe even higher before the end of the month? Or is the Q2 anchor going to solidify itself as resistance? And are we going to lose the year to date again, lose this range here, and just start going back down lower? Personally, guys, I'm not really sure. You know, we've got major recession indicators starting to fire off, but the stock market's going crazy, and you know, price is king. At the end of the day, the price is going to do what it wants, regardless of what the oscillators say. So that's pretty much my take. Now, man, there's not really much else to talk about today, but make sure you guys follow my Twitter at Flopping Groper. And I got some of these Mike Perry shirts still. Got a couple dozen of these shirts. Really nice, heavy pump covers. Use code Platinum, $25 off. And the indicator market cipher down here, I got an affiliate link in the description if you want to check it out. And what else is there to talk about? That's pretty much it. You guys have a good one, and I'll give you guys an update tomorrow. Hopefully things will look a little more convincing.